Okay, in the previous lesson, what did we talk about? We talked about a very easy way to form a daily bias. Okay, what was that way that we form a bias? Well, whenever we have a swing low that is put in on the daily chart, by having a swing low put in, our bias is going to be bullish until there is a swing high put in. Until there's a swing high put in, we're looking for higher prices. We're looking for buying opportunities. And then it's the opposite for shorting opportunities. So ES, I have a chart of ES right here, 4-hour chart. Now, if you look right here, look at my cursor. See how we got our lowest low in the middle? I have day dividers in, deviating each individual day. So right here is one day. There's another day. And there's another day. So you can see right here, we have our lowest low in the middle and two higher lows on the left and the right, making that a daily swing low level. So that's our criteria. After we get that daily swing low level, our bias is bullish coming into the very next day. Now we make sure we look at the 4-hour chart and we make sure that we had a shift in market structure. Did we have a shift in market structure here? After that swing low was formed, we absolutely did. That third candle, see how that third candle had an explosive move breaking that high? Now this is another keynote moment. Whenever you have your swing low level formed, it's best if that third candle is going to break the previous day's highs. So it is key how that third candle, that third daily candle, how it moves above, like how it closes. So in this case, you see how it broke above the previous day's highs, that third swing point. That is what you want to see. That's preferably what you want to see. And using the tips that I've given you thus far, we can see that this is a high probability shift in market structure. It has the criteria, right? It has the fair value gap, the strong close. It's a very explosive move. That is a high probability 4-hour shift in market structure. It was operating within a bearish market structure all throughout here. See how it was consistently trending lower, trending lower, trending lower, trending lower. And then boom, you had a big explosive move. Your swing low was put in. 4-hour shift. There's your 4-hour shift. And then we're coming into a new day. And now we are trading. Our bias is bullish. We're trading with that momentum. That swing point is now put in. We have that momentum backing us. Now we can begin looking for buying opportunities. And this is where we combine other concepts I've talked about. I actually posted this in chat the other day. Posted this chart in chat, but essentially this is where you combine the other concepts that I've taught you or that I'm teaching you in the technical analysis course, like support and resistance, SMC, all that type of stuff. So for example, I'm just going to show you, like I'm going to pinpoint the setup that I posted in chat for this play, like a little while back. Okay, so we had that swing low put in. It's a new day. We can look for buying opportunities. See right here how this 4-hour traded down into this bullish imbalance here. We know a bullish imbalance, whenever price taps into a bullish imbalance, typically it makes for good reversal opportunity areas. And also on top of it, we have an old high inside of a fair value gap, So that is a key support level that we talked about whenever we have an old high inside of a fair value gap. Okay, and then price does what? It tests that old high and it rips up. Let's go down to a lower time frame now. Remember, so this is the new day. See right here, look at my cursor. At that point, we had the swing low put in. It's a new day, and we already know our bias is going to be bullish. We're only looking for buys. That's if we're trading with this trend. The swing lows put in, the momentum is to the upside now. 4-hour higher time frame market structure is bullish, so we're trading with that higher time frame trend. And now we're going to utilize our lower time frame charts for specific opportunities that we can trade. So it's going to depend, like there's like so many different strategies out there. You could just play market structure, you could play the liquidity. It really depends on what you want to do. But here is that fair value gap on the 4-hour chart. Now this is displayed on the 1-hour chart. Right here, what do we see happen? Something that I've talked about in the technical analysis series, is the Judas swing. The Judas swing is essentially a fake run in the opposing direction of where price really intends on going, for the sole intention of taking liquidity or rebalancing price action. In this case, we sweep liquidity and we rebalance the portion of price right here coming into 930. We sweep these lows and we rebalance this price action. Remember, our bias is bullish. We had that bias coming into the day because we got this swing low put in, and we know we want to target these previous day's highs. If previous day's highs is taken out during London session, well, then you'll just target high day. Okay. Let's go to a 15-minute. See right here, we have 930. See how we open up at 930 and we moved lower down into that imbalance. We took sell stops, we tested that old high, and then we ripped up and we targeted previous day's highs. That right there, there's a setup in there. If you utilize like lower time frames, for example, see right here, there's 930. We dip down, we pull back, we come down again, we take out what? We take out sell stops. See how we take out those sell stops? we chop around a bit, and then boom, we got a shift in market structure right here. See that? See that 1 hour shift in market structure? Pricing does what? It retraces lower into a discount, rebalances that price action, and then it rips up and seeks upper buy side, aka previous day's highs. That's a setup in there. And you need to be watching key times with futures. Like basically, if there's 9:30 to 11 is where you want to keep an eye on the morning session for futures, and then 2 to 4 p.m. Eastern time. 9 to 11 and 2 to 4. You got these specific pockets of time. So far, what have I given you? I've given you a way to find the bias, a very clear, easy way. Swing low, look for buy until a swing high is put in, and then the opposite for shorting scenarios. So you have a clear bias coming into the day. I've taught you market structure, so you know that 4 hour chart, you know if it's operating within a bullish market structure. This one is. You need to be watching very key select times where volume is the highest, where price is the most active. So the open and bell in this case. At the open and bell, what is very common to occur? Judas swings. So knowing this information, we have a Judas swing down into an imbalance, taking sell side liquidity. And again, we have a firm grasp on market structure. So we know what a shift in market structure looks like right here. See that? And it's also in the first 30 minutes, which is a very volatile period where these key shifts in market structures will typically occur. We have it. And this is what you do. You just start putting different pieces of the puzzle together. And then you had that shift, and then eventually it ends up ramping up higher. So there's opportunities in there. Maybe you just wanted to play the 15 minute. See right here in the 15 minute, we had that move up higher. It pulls back into a discount, takes out these sell stops, and then moves up higher again. You could have got a buy down here possibly. Maybe your setup was on this pullback, this optimal trade entry, this pullback down into a discount after taking these sell stops. But on this day, you only want to be looking for buying scenarios. And the same goes for the next day. Because do we have a swing high put in yet? No, we don't have a swing high put in yet. So that means we're still looking for buying opportunities. The very next day, what happens? Very similar deal. We come down into 9:30. Here's 9:30. Again, when you're trading futures, there's very select times that you want to be paying attention, as we've already stated. If there's no news at 8:30, if you have high impact news at 8:30, then you want to pay attention to 8:30 as well, because typically that's where you'll see stop runs, key shift in market structure. But if there's no high impact news at 8:30, then 9:30 to 11 is your key time that you want to focus on for futures. 9:30 to 11 and 2 to 4. That's where you want to focus. It's very small pockets in time where these setups occur, and we know our bias coming into the day, and then we're combining other concepts that I'm teaching you, like SMC, like support and resistance, basic market structure. That's literally all you need. In regards to technical analysis, that's all you need. Market structure, support, resistance, SMC, and that's it. That you can make a living off of that. So you can see right here, I'm gonna go to a lower time frame. A common time Judas swings occur is right at the opening bell. Remember, our bias is bullish. We're only looking for buys. Okay, because we're trading with the overall higher time frame 4 hour trend. The daily chart is still swinging upwards. See right here? 9:30 opens up. Now on the 5 minute chart, it comes down and it attacks these lows, or attacks these lows beforehand, and then it attacked low of day, made a new low of day. So it attacked sell stops. And then what happened after it attacked those sell stops at 9:30 opening bell? You get a ramp up. You get a shift in market structure to the upside now. It's the same exact signatures, guys. Same exact signatures. See right here how we got a swing high? See that? Highest high in the middle, 2 lower highs on the left and the right. See how it broke that swing high? There's the fair value gap confirmation. And then it pulls back, it rebalances that price action, and then it ramps up and it seeks upper buy side, aka high of day. That's a trade right there. Look at that. That's a clear setup right there. We knew coming into the day that we were going to be looking for buying scenarios because the 4 hour market structure was bullish, still swinging upwards on the daily chart. Coming into 9:30 equity bell, we have our focus on this chart because that's 9:30 to 11, as I stated. It's the morning session. You want to pay attention. 9:30, we're fully aware that a very common time that Judas swings occur is right at the opening bell. And we have our bias, which is bullish. The overall trend is bullish. And we see it taking out this liquidity right here. And it's followed by a shift in market structure. See that? Playing market structure is a edge. Market structure is an edge. Let me say that again. Having a firm grasp, a firm understanding of market structure is a edge. That's literally all you need. So we have our higher time frame market structure backing us. And then we can utilize a lower time frame chart to identify those key lower time frame shifts in market structure, and then we can get on board that trend. So again, you're playing the higher time frame structure. You're playing that 4 hour market structure because that trend is bullish. You're trading with a 4 hour trend, but then you're utilizing lower time frame charts, and you're looking for those lower time frame shifts in market structure to get on board that trend, to time it. to minimize your risk, to maximize your reward. This is how you do it. You use a lower time frame chart and you pay attention to very select time periods. Again, 9:30 to 11, 2 to 4. That's all you need. Those 2 periods of all you need. Really just one of them. Really just like you could just trade 9:30 to 11 and just focus on that time period and make a killing. Right there is a edge. That's a full system. Utilize higher time frame market structure. Only trade with that 4-hour market structure, your higher time frame market structure, and then trade during very select periods, and then utilize lower time frame market structure shifts. Look for those lower time frame market structure shifts. Once you get a high probability shift, it pulls back into a discount like it did here. Get on board the trend and look for those higher objectives. A reasonable PT, what would a reasonable PT be? High of day. In this case, a good PT would be high of day. Since we already took out previous day's highs right there on that move up right there, then we pulled back. We had that shift. It pulled back, rebalanced at price action. That's a good PT right there. I'm not forcing you into a mode. If you want to be conservative, you can be conservative with your PTs, but that is a reasonable PT high of day because you're trading with that overall, you're trading with the higher time frame market structure. You get an entry down here, risk the low, target the highs. This signature that you're looking at right here, it occurs often because it's market structure. That's all it is. You're identifying your higher time frame market structure, in this case the 4-hour, then you're utilizing lower time frame market structure shifts to get on board that trend. And you're looking for, like, you can mess around with this and add your own twist to it, do whatever you want. If you only want to trade opportunities where there's like 2 to 1 risk reward, at least do that. If you only want like 3 to 1, do that. If you just want to play the market structure, do that. You can add your own, I want you to add your own twist to it, find your own style with it. I mean, like this right here alone, this one play, let's see what that would be, what that would give you. If you got in right here in that fair value gap, risking that low. What is that? That's 6 handles, risk 6 handles to make 20 handles. You're risking 6 handles to make 20 handles. That's awesome risk reward. That is out of this world risk reward. You can be right less than half the time and be profitable with a risk reward like that. And these setups, they do repeat. Like every week, typically you'll get at least one setup like this, one to two really solid setups like this a week. You just got to be patient for them. And again, you don't got to be right that often to be profitable with them either. So let's go over it one more time. Let's go over the thought process, because I'm trying to give you guys different thought process. I don't like, a lot of you know my strategy, you know the way that I trade in Forex, and it may not fit you personally. You might trade futures, you might do something else. So I'm giving you other alternatives, because price is price, same signatures. And if you look at this, it's basically like, it's the same exact stuff as I do in Forex. It's just a lower time frame. Basically, it's the same exact patterns that I do in Forex. It's just a lower time frame chart. In this case though, like your higher time frame level would be a key liquidity pool, like, you know, the 1 hour, like a 4-hour liquidity pool, 1 hour liquidity pool, 15-minute liquidity pool, followed by that lower time frame shift in market structure. And then you get in a discount and do it that way and trade it that way. We're going to go over it one more time to really drill it home, because for some of you, this might be the strategy. Like this might be what you want to do. Like this might be what you solely want to focus on. This might be what fits you. And then just run with, you might want to run with it and just trade this. So again, step number 1, we see we have a daily swing low level that was put in down here, which means our bias is bullish. It's going to remain bullish until a swing high is put in. We've confirmed that the 4-hour market structure recently had a strong high probability shift in market structure. So we have the swing point put in, we have the higher time frame 4-hour market structure backing us. And at that point, we're playing that 4-hour higher time frame market structure. We're playing that higher time frame trend. And then we're utilizing lower time frame charts. We're utilizing key specific times of the day, key levels, to nail our entries down, to be precise, to minimize our risk, to maximize our reward. So in this case, that 9:30 Judas swing, this is what we were just going over. Look at my cursor, that period of price action right there. Look at what we got right here. We have a key liquidity pool. Whenever you get your Judas swings at 9:30, at the 9:30 equity bell, whenever you get a Judas swing, you want to see it take some sort of key liquidity pool or rebalance some sort of price action. Okay, like over here in this case where we were talking about a second ago, it took out the lows and it also rebalanced this price action over here prior, and then it had a lower time frame shift. That's what you want to see. Right here, we took out these sell stops and then we had a lower time frame shift. And remember, higher time frame trend is bullish. So you're looking for these key liquidity runs followed by a shift to allow you to minimize your risk and to maximize your reward. Then on the 5-minute chart, see this? There was our move lower. 9:30 equity bell, look right here. That's where we opened up at. And then we had a move lower, aka your Judas swing lower, or turtle soup, whatever you want to call it, potato. And then we get a move up higher because we took out this liquidity. We ran those sell stops, and it was followed by a lower time frame shift in market structure during a key time, during a volatile time. And it was not just a shift in market structure, but a high probability shift in market structure, because we got our fair value gap confirmation, we got the strong close, we had everything we want on it. Refer back to my earlier lessons that I made in this series. That's a high probability shift in market structure. Took liquidity, and after taking that liquidity, we saw a shift in market structure. That's what you want to see. After you get that lower time frame shift, you wait for price to pull back into a discount marketplace to get an entry, or inside the fair value gap. You risk the low and you target the next key liquidity pool. Now, again, like profit targets and stuff like that, it's up to you. Hive day is a good PT still, because you're playing the higher time frame market structure. It's bullish. And because the higher time frame market structure, 4-hour market structure, is bullish and you're trading with the trend, that's a valid PT. You're not fighting the trend, so that is a valid PT. Or you could be conservative, like really play it safe and just risk and shoot for these highs up here. Or maybe take partials here and then take some up here. It's up to you. But the key point that I'm trying to drive here, going over this setup, is what you want to see is you want your higher time frame 4-hour market structure backing you. Okay, you want that swing point. You have your bias coming into the day. You have a very easy, simple way to determine bias. After you get that bias, you're utilizing the other tips that I gave you in this technical analysis course, like support and resistance, like order blocks, like fair value gaps, like liquidity runs, Judas swings, kill zones, and you're combining it all together while trading with that higher time frame market structure, and you can build a system off of that. Again, this signature, it's very similar to the way that I trade in my personal Forex account. Like, it's the same exact pattern basically. It's just with futures. And you could do the same thing over in Forex. Maybe you only trade Euro USD. You could do it with Euro USD. Same exact deal. Look for those swing points. Look for your 4-hour market structure. Target key liquidity pools. Like, it's the same exact process across all markets. Like, it's a working system. This right here is an edge. Having a firm understanding of market structure is a edge, because then you just got to manage your risk, trade with overall trend, and you're good. That's all you need. That's all you need in regards to technical analysis. It's that simple. Then you just got to manage your risk, and you got to conquer your psychology. That's it. You're set.